Macro charts. Welcome back, baby dolls. We're going to go through some macro charts and the non-believers will be mogged. Everybody wants to know, are we still on track? I want to cover this for you. These things move slow month to month, but when we have the buoyancy boost from underneath our wings, it's actually fantastic. Macro charts, friends, we are still on track. Okay, I know it looks garbage around out there, but we're actually still on track. I'm going to go through these with you slowly. I just want to let you know nothing's changed. Okay, you know, even before we argue about anything, look, the business ISM cycle, we have not ticked above 52. All right, we hit 50, but then we faked down. So it was actually a fake out. This has been the longest period in not joking, like 40, 50 years. You can't even go back a period where we didn't even go to 52. I'm not even joking. You go back, you cannot find the cycle it didn't go to 52. It would always tick above 52 and fake about. Friends, we're in 1995 now. It's still ticked 52. See these? They ticked 52. My gosh, we're still going back, friends. Look at even this. This was, bro, 1980s. Yeah, okay, this is a terrible, terrible period. This is 39 months. 1980s. You see that? This is garbage. But we're in 1979. That was high inflation. Wow, man. Well, didn't they have they had 20% interest rates, 17% interest rates here. So literally, okay, I had to go back 45 years. So okay, the last time it was trash was literally 1980. 45 years. Okay. But are we still on track? Yes, we are. This is ISM New Orders, the white line. And there is a dark blue line here. And you can see that it's curled up. This is GMI's short-term lead index. So what they do is they just compile the leading indicators, you know, from surveys and stuff out here to see, are people buying more things? Are the purchasing managers of every company and warehouse, are they ordering more stuff? Right? It's curled upwards already. It's a forward-looking indicator. Isn't that beautiful to see? On top of that, another chart. Check this out. This is financial conditions 9-month lead. Okay, so pretty much what they do is, remember, financial conditions, you got to remember, there's the stimulatory stuff from the Fed where they go, you know, QE, interest rates, Operation Twist, where they twist your nuts with the yield curve. That's actually painful. Untwist the nuts, friends. You know, that just hurts thinking about it. But they do all these, the Fugazi stuff out here, but that's only half of the equation. The real stimulatory stuff is the natural economic balances. So when the US dollar goes down, it stimulates US because it's cheaper to buy from American, just American producers of anything. Do you get it? And it helps everything. Also, when the price of oil goes down, yeah, your weekly expenditure on oil-related goods goes down because petrol's less. Not just your car, but everything else. Remember, I think there's about 40% of your weekly spending is related to oil. 40%. It's big. It's not just petrol, even though it's a big amount, but 40%, man. Like all the tins and the cans and the squeaky chairs and the orange juice maker. All of these. It's a big component of it. And like 30% is your living cost. That's why the interest rates matter a lot. That's like either your rent or your mortgage. And like 30, 40%, man, it's big. It's big. That's why if oil goes down, it helps big time. Look at this. The indicator of financial conditions, it's ticked up. Yeah, it's ticked up. So it prices in stuff like they just try to make models and stuff out here just to give you an idea of like what's coming around the corner. This is, remember, this is ISM, the white line, and this is altcoins as a percentage of Bitcoin. So this is pretty much, fans, funny, that's others BTC. Altcoins as a percentage of Bitcoin. You see how pretty much we're curling up. So that's why they have the up arrow up here. So ISM, man, it's been scamming us. It's been going on. See, it went over 50. It has not gone up yet. We need that wave up. We'll get that wave eventually. We just don't know when, you know? It's like everyone knows, okay, one day it'll get there, but is it going to be this year? Is it going to be next year? Is it going to be 5 years? Well, man, we're already, it's literally the worst business ISM conditions since 1980. So 45 years, you know? Last time we go and went worse than that was, yeah, it was 1980. And that was 39 months. So, you know, it depends. Like even the next reading, right, it depends when it hits 52. What if it doesn't hit 52 for like another 3 months? That means our 29-month reading for the business ISM goes all the way up to literally like 31, 32 months. Remember, the most was 39 months that we just saw. And they had interest rates at 20%, bro. Wild. Okay. So the macro there is on track. Check this chart out too. This is the Dixie. This was Donald Trump's first term. You see the white is the Dixie overlay, and I've always show you that chart, right? And then blue is the Dixie today. You can see that Trump's done the same thing. First, the Dixie went up, and Trump's like, say, hey, the dollar's too strong, and then he starts basically getting the dollar down. You know, hey, we're gonna do tariffs. We're gonna do this. So we're gonna do that. We're winning. We're winning. We're winning. I'm so sick of winning. Please, I've won too much. There's so much winning. That's what it is. So when the US dollar goes down, it makes America more competitive. They stimulate everything. Thank you very much, America. God bless America. All right. And by the way, when Americana has the Dixie go down, China currency goes up. And then that allows China to print. Just like they did in 2017. They did that in 2017. Dixie went down. So friends, let me just show you again. As the Dixie went down here, China did like a $900 billion stimulus or something big. Okay. And that boosted everything. Now back then, there wasn't the macro people out here. And basically everything went up only. 2017, why we always refer to it. It was the biggest alt season crypto has ever seen. I mean, like, we still have the memes from it. It was literally the biggest renaissance period. Bitcoin, man. That was Ethereum's first cycle. Yeah, man, I wonder if we're ever going to get something similar to that. Check this out as well. This is the global liquidity. Okay, this is just, it's just showing Trump's term. You know, it's just like, hey, it's right on track. This is the Navy out here. Hopefully it just keeps going up and to the right. And we just continue. Remember, that's what you're hearing crypto for. You're hearing crypto because it captures like a vacuum. Sucks up a very family-friendly way type of sucking up, by the way. It sucks up all the excess liquidity. Which basically means they print money, they scam everybody out there in the world. No one knows they're getting scammed because it's like, oh no, it went to the financial banks and authorized dealers. They usually bullshit words. It doesn't matter, bro. We know you're getting scammed somewhere. They say that the Kippy is 3%, but the money suppliers go up 7.5%. How do we know they're lying? Gold. That's how. Gold grows at 8%. Gold hasn't done anything for literally thousands of years. It has no technology. There's no gold technology. It goes up 8% per year over 20 years, which means someone's lying. Either the price of gold's lying for thousands of years or governments are lying. Gold does nothing. It maintains its purchasing power. Okay? So because gold grows at 8% per year on average, but it's not one to one year, it's over a 20-year period. Okay? It has these periods of decorrelation and catch-ups and stuff out here. Okay? So don't forget that. The real inflation rate in this world is 8%. It's gold's rate. All right? You get it. That's why it's all a scam for Ghazi. That's why Satoshi made Bitcoin. He's like, man, but gold sucks. I can't send it across the globe. We need something else. We need a Ponzi. I'm just joking. Kind of not. Check this out as well. Global liquidity, friends. So it's this big wedge triangle. This is where we are right now. If you want to know why our cycle's basically been ass so far, in 2020, we had zombie virus. They front run the printing. Okay. Also in 2017, you see these up and to the right, up and to the right. And look what they did pretty much in 2013, up and to the right. Okay. You can't see the 2012 part. You see these up to, look what we got in our one. Dog poop. We got sideways of the money printing. Okay. So I'm just going to show it to you now. So the bottom left went up and to the right. This one, cycle 2, up and to the right. This one, this was obviously cycle 1, cycle 2, cycle 3. Apologies for the French there, friends. And this is our cycle 4 here, okay? Do you see how this garbage was sideways? Yeah, now we're hoping we get some sort of catch-up. We're hoping and coping. All right? Now, why hasn't it happened before? I don't know. I think it's kind of because they printed so much in zombie virus 2020, inflation's so high, they can't do the stimulation stuff with the money printing because just inflation's high. I think that's why, like, it's outside of our control anyway. You know, it is what it is. That's why our business cycle and everything's been ass. Check this chart out here as well, friends. This is the S&P 500. This is something cool as well. Look at that. This was on the dip, on the Trump tariff. Percentage of stocks with a 14-day RSI less than 30. Look at this. This is number huge. The last time I hit it was, wow, 2022 bear market for America, and before that was zombie virus Interesting. And before that was when this was when Jay Powell had to capitulate and cut rates on Christmas Eve 2018. That was actually the bottom of crypto. Crypto had capitulated, which is interesting, right? So just showing you like that's how cheap so many coins just got wrecked on that. But wrecked means cheap buying opportunity. No financial advice, could go to zero, yada, yada. All right. Mr. DHD testosterone, some good hopium in that second picture. Yeah, so there is a lot of hopium out here, but like these are real. It's just that like they move bi-weekly or monthly. You know, but in crypto, man, it's like it's a 24-hour cycle. Like there's Asia session 8 hours, then Europe 8 hours, then America 8 hours. Like it's rolling all the time, and then it rolls on weekends because there's freaking Jeets. They can't hold on to shit. They can't hold on to a paper bag. You can't trust them. They're like, oh, I better sell. Not the Asia session, which I kind of don't blame you now because Asia session are a piece of shit Jeets, and they can't hold anything to save their lives. Asia session, you garbage, filthy humans. I've been watching you for 15 years. You're freaking trash. Believe in something. Gosh, man. What a letdown, bro. You guys are just embarrassing, dude. Just get out of crypto, bro. Go buy some other shit. Go hold the Nikkei or the Kospi or something. It's just, friends, there's so much soy latte love in the world. It's infected them. Oh, the American session. Oh. Can't hold into any gains. This is global M2 with the NASDAQ as well. See, NASDAQ fell off a cliff here. This was in the midst of the turmoil. Global M2 is going up. All roads lead to money printing. So macro, in a nutshell, it's going to plan. And we're going to need more time once again. Didn't think it would be this far. Like they're literally leaving it down to the wire. What else can we do, man? We better get a big pump. We better get the biggest pump. Mr. President, I can't stand this anymore. We're pumping too much. Please, Mr. President, please. The pump is so big. We're all pumping. I want to be yelling that. But for now, I'm going to continue to mog all the non-believers. Like, subscribe, bell button, I'll catch you soon.